Good afternoon, everybody, and thanks heaps for coming along today to listen to our webinar on tax audits. For those of you that don't know me, my name is Peter Johnson. I am the founder and a director of a business called Advisors Digest. At Advisors Digest, what we do primarily is teach tax and super to accountants. Top of that, we do a bit of technical support as well. So in a way, you might say we have a second-hand interest in tax audits as well. But today, in today's webinar, we've got two of the real experts in tax audits. We've got Rod Spicer, who is an Associate Director, Claims and Underwriting, and Roman Kaczynski, who is a Director of Accountancy Insurance. Now, I don't think accountancy insurance really needs too much of an introduction. We all know who they are, but what they're going to do for us today is they're going to talk about the claim trends that the accountancy insurance department identifies and what they've identified from 1 July 21 to 30 June 22. So it's very timely. It's only a couple of weeks old, and they do this annual update for their own team, and they're also going to give us this update as well. So they're going to look at the proportion of claims that Audit Shield gets in all of the different areas. There's audits of employer obligations, so you get PAYG, super guarantee, fringe benefits tax, income tax. There's the next 500, the high wealth audits that the ATO are conducting on the super rich people. Payroll tax, obviously we know state governments are addicted to payroll tax. BAS audits, pre and post assessment BAS audits, rental property audits, and more, all that sort of stuff. And all up, this represents almost 1 million businesses and self-managed super fund taxpayers that participate in Audit Shield. Now, just a little bit about our Audit Shield presenters. Rod Spicer, he's a chartered accountant himself with more than 30 years experience. So he is one of us. He's held various roles and he's worked for the big guys. He's held positions within an international accounting organization. He's been with Accountancy Insurance since 2013, and as we said, Associate Director of Claims and Underwriting. And so what Rod's responsible for is the operations of the Claims Department. Obviously, that's why you need a chartered accountant in there, and he looks at policy wording, development, and all that sort of stuff, and also looks at large, complex claims. Now, Roman Kaczynski, Roman's also an accountant. He's a CPA, started his public practice career in 1984. That's actually when I started my work in accounting as well. Worked in small and mid-sized practices before starting Halifax Business Consulting in 1998. And it was during his time at Halifax that he was introduced to Accountancy Insurance, originally as their external accountants in 2004 in the early stages of operation, and later as a user and advisor on tax audit insurance products, especially Audit Shield. So obviously Roman's understanding of the tax audit insurance area is that's it. It's sort of the best in the country because he's worked in an accounting firm, he's dealt with audits, and he's got claims expertise as well. And so he's been on the board since 2009 when he became a director. So, boys, I'm going to hand over to you for a bit, and I'll be the moderator for our discussions today. So over to you, Rod and Roman.
Thanks, Pete. Now let's get the slides happening. Okay, most people would be familiar with us, with Accountants Insurance. We'd like to think, but for those who haven't, we've been doing this now for over 19 years, and we specialise predominantly in the one thing. This tax audit insurance is our specialty. We do offer some professional indemnity insurance as well, but tax audit insurance is what we specialise in. So with that specialty, and we, as Peter describes, we do come from an accounting background. And accountants have made this product for accountants. So we know pretty much what you're going through. We understand what's happening, and we'll give you the fairest and best review of your circumstances when it comes to the claim time. So our credibility for this session today. So this is, I'm not even sure how many we've done of these annual conferences, but basically the concept is that with our breadth of clients we have across the industry, and their clients that are associated with that, and the claims we get from that. So from second tier firms down to single operators, from country firms to city firms, from multi-partner firms, and with specialties in there. So our client base, we'd like to think, has a fairly good representation of the broader market. And it's from that base that we present this webinar to you today and every year, to say, okay, this is what we're seeing as far as our claims, which represent the audit activity that the revenue agencies are providing or undertaking in the industry over the last year. So we take this time, we look back over it and sort of discuss some of the trends and the exciting things and the activities that are happening around. So first of all, just always want to sort of mention that from an accountant's perspective, everybody has to comply with compliance. We certainly do. So when it comes to, we take compliance very seriously, and we are in an insurance space, and we look after your compliance obligations when it comes to the offering of Audit Shield. So we have, the ASIC relief, which gives the accountants the comfort to know that they're offering this product and it's compliant with ASIC's rules and requirements. We recently, some of you may have already experienced the conversations we've had with regard to the deferred sales models. One of the concepts that came out of the Royal Commissions into the financial services, one of the extra layers of compliance that have been imposed, and so we're managing that on behalf of all our accountants as well. So all the appropriate disclosures are made, and also we're undertaking ISO 27001 accreditation at the moment, so we certainly comply and follow all ISO 27001 aspects, and will soon be compliant and certified in that space as well. So we do take compliance very seriously as part of what we do. Now, that's a little bit about us, but the whole webinar here is about the trends and the claims, and that's where our man Rod jumps in. So I'll just hand over to you, Rod, and let's talk about what everybody's here to listen to.
Thanks, Roman. So what I thought was best to do today is we'll work our way through, call it the trends, but also the statistics, if you like. Accountants love statistics of what we saw in claims that were submitted to us in the financial year to 30 June 2022. We'll have some comparison stats for the year before, but that was probably a year that we all choose to forget anyway in many respects. And the stats year on year are probably not 2 years really like for like. However, what we saw in the 30 June 2022 year was breaking it down to what were the six sort of highest categories in terms of number of claims that were lodged, and we'll work through each one in more individually. Was employer obligations came in at number one. Income tax, which is a very broad category in itself because there's various types of audits that happen within that space. Number two, the ATO High Wealth programs came in at number three. Payroll tax 4, BAS GST audits 5, and then specifically some rental property, which I know it's linked to income tax, but breaking it down specifically sort of came in at number 6 on the ladder, if you want to break it down that way. So this is our pie chart for the year, that obviously the 6 biggest pies with the 6 audit categories that were on the previous slide, but it puts some numbers and statistics around it, and we can see that the employer obligations nearly took 13.5%, income tax on a full general, but I tend to look around the bottom quadrant of the pie chart around income tax, and it adds up to really like 35% of the claims come from income tax related matters. And if you throw in rental property, it's more than 40% of our claims will link to income tax matters from the ATO. Payroll tax always gets a run. It's always in the top 5 every year. The ATO High Wealth program, again, you could argue it was income tax related, but it is a lot wider than that. And then GST comes into it as well. So if we then take a look at the year before, and I won't dwell on that too much, but the big differences were the number one category in the 30 June 2021 year was actually the GST post, pre and post, but it wasn't GST, it was cash flow boost. So people would know that the ATO basically shut up audit shop from all the audits were on hand when COVID came along. They pretty much closed them all down, put them on delay mode, and started doing JobKeeper audits and cash flow boost audits effectively from about March 2020 all the way through to really that financial year, because JobKeeper finished and so did the cash flow boost. But they weren't there this year. So whilst we do cover JobKeeper audits, we're not really seeing anymore. I think it's in the past. The ATO don't want to reopen that area, and cash flow boost finished with the September 20 BAS lodgements anyway. So we've now seen ourselves return to what is more traditional patterns of audit activity, and employer obligations continues to be number one for the last 2 financial years. So if we then delve a little bit more deeper into the employer obligation type audits. Now, ever since single touch payroll came in, we've just seen more and more and more audit activity being conducted by the ATO. But it's taken the best part of 3, 4, 5 years because single touch payroll was introduced at various stages based on over 20 employees, under 20. Then there were small businesses were cut out for a while, but pretty much everyone is in single touch payroll now. So the days of employers effectively getting away with not paying their super on time, not paying at all, missing a bit, catching up, sort of playing a sort of a cash flow game, if you like, they're really gone now. You can't, I'll catch it up later. Don't worry, I'll pay all your super to the employees. They just don't get away with it anymore because the ATO through single touch payroll is across what's going on now. Now, obviously they can't audit every single employer that pays their super late, but when a pattern emerges, the ATO now has the resources in order to be able to track that, and that's really focused their target audit targets on more businesses that aren't complying, and they can tell that from the single touch payroll. So that's why we are seeing more and more and more super guarantee audits, and then they then can expand into PAYG, fringe benefits tax audits as well, all linked into that employer obligation area. But by far, super guarantee is a key focus area. And people go, well, why are they auditing a role? Well, it's people's money. Super guarantee is not a tax audit. It's actually got nothing to do with tax collection. Super guarantee, it's people's money. And if the employer doesn't pay it, drawing a long bow, in 20 or 30 years' time, that person who didn't get their super paid for the June 22 quarter by their employer is going to put their hand out to the government for aged pension because their super isn't up to the level that it should have been. And it'd be interesting that people watching this webinar, and I know there's many accountants, that I think last week was the due date for every single employer that failed to pay their super for the June 22 quarter on time were required to have lodged their SGC statements by, this week, last week in August. I can guarantee you they didn't do that. The vast majority of them just do not comply 100% with the requirements of superannuation guarantee. It's been there for 25 years. It's not something that's new. It's been the rules have been in place for 25 years. So with single touch payroll now, the ATO is far more focused with a lot more visibility around compliance in this area.
And if you look at the previous way that the ATO would be onto this would be in complaints. So employees would have made complaints. those complaints would have been registered inside the ATO. The ATO would have worked through their list of complaints and tried to work out which ones that they wanted to audit as far as a criteria goes. But as Rod says, now they have the information at their fingertips. So it's they are in complete control. And as Rod says, the chances of an accountant who doesn't prepare a lot of the functions inside what is being audited here, knowing in that short period of time that other obligations exist, being those shortfall statements, is pretty low. So there's a big exposure for the accountants, because the clients don't know any different. They just make their choices. But it's back to number one.
Yeah, so I like to, in these presentations, there's a lot of media out there these days, and I'm sure the vast majority of people watching this webinar today will be subscribers to Accountants Daily. It's sort of like the daily newsletter, if you like, for accountants. It now comes in the morning instead of later in the afternoon, or when it came before midday. But for us, it's full of gold nuggets most of the time. There's a lot of articles about audits, what's the ATO saying, what are the accounting bodies saying, and these bodies are out there saying these are the things that we're going to target. We're making statements. Look, the Australian National Audit Office is making statements about super guarantee shortfalls, targeting employers. The ATO, they're out there at doing webinars, presentations at seminars. Most seminars, if they get the Commissioner of Taxation on their panel or making a presentation, it's like the guru is coming to speak at a conference. But they're out there saying what they're doing, and then we see it being said what they're going to do, and then we see, yes, that is what they do, and the statistics sort of back that up. If I use something like rental properties, the ATO have said for the last 2 or 3 years, we are going to be targeting rental properties because they have data from Airbnb stays, and we'll talk about it even later. But they're looking at work-related expenses, cryptocurrency, all these things they're saying they're going to look at. We see them then look at it. And that's the point of some of these media grabs. They're not just saying it for the sake of saying it. That's actually what they're doing. And when we look at income tax, which is the second biggest category, which makes logical sense that it would be a very high proportion of audit claims, because it covers the vast majority of these income tax audits are where, okay, we're going to audit the lodged tax returns of this client or this client group for the last 3 years. Now, in that is a whole gamut of different things that they can look at, whether it's Div 7A, do the sales equal the BASs from an income tax perspective, entertainment, expenses, you know the type of things that the ATO will focus on. And they then get caught up in these large scale income tax audits, and we call it full general combined, because they're not always just honing in on one specific area. They target multiple areas. And when I look at all the different types of income tax related audits in our pie chart, as I said before, we're talking about 35% of the audit claims are roughly coming from income tax related matters. And if you throw in rental properties, it's over 40%. So there's a large proportion of different types of things that the ATO are looking at, but they're all linked to items in a tax return. If you have debit loans in a company, there's requirement to disclose amounts in the Div 7A boxes. Okay, if there's something in that Div 7A box, well, is that company compliant with their Div 7A responsibilities? It's going to get a look at if there's an audit of that company for sure, guaranteed. Again, some more media comments, and I sort of have looked at that. I mentioned it earlier, what the ATO is cracking down on. Cryptocurrency, the ATO now has access to data from the crypto businesses to be able to, and it's in the pre-fill now. If the ATO knows one of your clients has cryptocurrency, it will pop up in the pre-fill report for that client now saying, we're aware that they own crypto. I don't think it goes as far as saying what gain or loss they think they might have made, but they're aware of them.
Plenty of software at the moment out trying to capture all of
absolutely. There's plenty. There seems to be more businesses ever. So, and there's lots of seminars and webinars and promotion around the crypto world. That's certainly what's going on. Work-related expenses. Again, I think I see it now during COVID, the various new initiatives like the working from home phenomenon that's now come into society, that people are now claiming a lot more working from home office expenses. But I think the flip side of that should be less motor vehicle deductions potentially if you're claiming like on cents per kilometre. So these data matching type things will work their way through as time goes by. I think there's a point there, and I think I saw last week there was an article where the best part of 180,000 taxpayers lodged their returns in July when all the data wasn't in the pre-fill yet. So that will be some sort of data matching could come through. If you own units in a managed fund, those tax statements don't come through to like October. So if you're lodging your return now, it's probably just going to be data matched and amended at a later date. Now, we cover data matching. It's effectively a review of a return. If you want to lodge it now and then it gets reviewed later and amended, on face value, that's potentially a claim that we would have under our policy. So double dipping on deductions. And the last point there was the taxpayer alerts, TA 22.1 that came out earlier this year. I was inundated with inquiries. Are you going to cover that, Rod? Does Audit Shield cover the perceived crackdown that's coming on trust distributions and reimbursement agreements within family groups? It's all the ATO is arguing tax avoidance. So it was a hot topic there for the best part of a month or so, but then there was some water thrown on the heat of the fire from the ATO and the various accounting societies jumping up and down. I think it got watered down a little bit, but it's not gone with. So there's definitely going to be some sort of crackdown on the future into the next few years on when things get finalised on this trust distributions. And if it's about distributions in a lodged income tax return, then Audit Shield's certainly going to cover that. There's no doubt about it. It was yes, we're going to cover that sort of thing for sure. So the next one we're talking about is the ATO High Wealth. So back in October 2020, nearly the height of COVID in certain parts of the country, the ATO decided in their infinite wisdom that they would launch the next 5,000 streamlined assurance review program. So let's highlight that number, 5,000. The ATO are auditing 5,000 taxpayer groups that are perceived to be linked to an individual, and that group with a net wealth of $50 million or more. It's not turnover based, it's asset wealth based, 50 million. Now, the ATO don't have 5,000 auditors to allocate one audit to each auditor. So we are still seeing some, 20 months on, the ATO is still working their way through the 5,000. They tend to do it in waves of 2-month blocks. And again, in August, we saw the next wave of audits in this next 5,000 program starting. So they're still working their way through them. So let's say it's going to be more than a 2-year project to get through these 5,000. I'd say it's got to be 3, maybe even 4, because once the audits start, they don't just finish in a short space of time. They tend to take quite a long time because most of those client groups have multiple entities and touch points, not only in Australia, but also a lot of them internationally. And the ATO is looking at the whole group and all of their tax framework around high wealth individuals. So they're quite complex, they're quite large audits, and they take time. Hence why it's going to take a long time to get through this program.
Maybe when they finish this 5,000, they'll do the next 5,000 version 2.0. They
might, or maybe as you clock over into 50 million in assets, you get auto audited into the program or something. When they troll through the rich lists of Australia. But we've seen, it's been a big area for us in terms of claims because we do have a lot of end clients in this space that see the value in having Audit Shield, and this program has certainly seen them get their value for being participants in Audit Shield.
When I was looking at some of the data earlier on, I was looking at it from a calendar year perspective rather than the financial year perspective, and it was amazing that our claim exposure, if you like, in this space for the calendar year of 2021. It was almost tripled to what it was in the 2020. Now, in our data, we're showing up there, it's financial year, so it's slightly different. But just in that 12-month space, it almost tripled in the in value of how much claims we're paying out. So it's certainly an area that's getting attention. And if you've got clients in this space, then it's it would be a concern. If you haven't been involved yet, I think it's just a matter of time if you're in that next 5,000, because it's they're looking like they want to work through the whole 5,000.
Yeah, again, a couple of media grabs. Took the Fin Review till about April to put out a bit of a grab on it, or a bit of a story that I read, even though it's been going since October 20. But the nation's super rich, as the Financial Review called it. I actually think there's another level above that, which I think Peter mentioned 500 before. There is a separate program that runs for the top 500 wealthiest Australians as well. But this program that we've seen a lot of is for that 5,000. It says it there, they're more than 50 mil. And I think it's a PwC, as Roman just said, if you haven't seen it yet and you know your client's worth that and you think they'll be on the list, well, maybe they're in the next wave that'll probably come in about October or November, I would think. Payroll tax. Payroll tax is always in the top 5. So you'll never hear the state revenue officers saying that, but as I say, someone's got to pay for COVID. So all the money that was handed out in COVID, all the budget deficits, both state and federally, well, there's only a certain number of levers that the governments can pull. And one of them is tax audits. And what we have seen is payroll tax audits across Australia just pretty much now returning to their pre-COVID levels. And it hit the top 5 again in the 30 June 2022 year. And what are the reasons that we see behind payroll tax audits? Grouping. Every state payroll tax revenue authority loves a grouping audit. If they can group 2 employers into a payroll tax group that were either claiming separate thresholds or were claiming to be under the threshold, it's a win-win from a tax collection perspective for that state revenue office. So that is why grouping of related employer entities gets a heavy focus in a lot of payroll tax audits we see. They're trolling through ASIC company data, trying to match, the Smith family together, the Spices, the Kaczynskis, whoever, are they linked? Call it whatever you want, but they're doing their own mud maps in the background, trying to group employers from an ownership perspective, looking to see if they can group them for payroll tax. Contractors. I know there's a lot of exemptions for contractors in payroll tax, but it's a complex area. And it's, again, a key focus area, because if the revenue authorities can get previously payments to contractors that weren't having payroll tax paid on them, subject to payroll tax, it's more tax collection for the revenue authorities. Employer based in other states, where they open, say, a branch office in another state, they might be registered in New South Wales or Victoria. They open an office in South Australia and employ some people over there, for example. It's quite amazing how many times they forget that they need to go and register in that other state, because it's Australia-wide wages, and it doesn't take long for the revenue authorities, through data matching from tax file number declarations, for example, or a workers' comp registration in South Australia, because there's employees now, to data match back to a payroll tax investigation as to why they haven't registered for payroll tax in South Australia, using that example. Employers that are over the threshold and need to be registered and aren't registered. Again, data matching through other the ATO, WorkCover authorities, or other data sources that they have, can soon identify businesses that look like they could be paying wages above the threshold for payroll tax in those states, and they'll launch an investigation into why they're not registered. What are the reasons? Do they need to be? And more often than not, they end up in sort of backdated registrations and unlodged payroll tax returns that should have already been done, but weren't for whatever reason.
So the state revenue officers and the WorkCover authorities in the WorkSafe authorities in every state, they share a fair bit of information together, and it's not uncommon for us to see sort of a taxpayer get hit for an audit by one, and then within a short period of time, and there be adjustments, and then a short period of time after that, the other authority steps up and says, we want our piece of the pie now because there's information that's new to us. So that would impact on our collections. So the two work. Traditionally, we're seeing a lot of correlation and sharing of data between those areas.
And I think, can I also add to that, property sale data? So, people might wonder, well, how does a property sale end up in the pre-fill of an individual? Well, the state revenue officers are feeding all the property sale data from a stamp duty perspective through to the ATO on a regular or annual basis, however they do it. And if that property can be identified based on its address, which it can be, as either principal place of residence, not principal place of residence, they can see it's a rental property, etc., and has been a disposal, then the ATO is going to have their hand out for a capital gains tax event. And because they already know that property was sold by John Smith, whoever it might be, Betty Smith, doesn't matter who it is, every property sale data is working its way into the ATO for them to then mine that data and do what they do with it, and that's how it ends up in a pre-fill. It's actually amazing how many times there is an audit and it's that person's the trustee of a trust, and the capital gain event was disclosed in the trust. So the ATO might have some data and a lot of data, but not always all the data. And there's a lot of time involved in messing around and proving that, if you like, to the tax office for no tax being missed at all. It was in the correct place all along. But the accountants, as you guys know, would spend time and effort on getting to the position that was always going to be correct. And that's really what Audit Shield covers in part as well, that time for doing that.
Just on the topic of data collections, and it's probably old data now, it's an old statement that the ATO made, but they talk about 600 million transactions that they would capture inside their risk profiling tool. So 600 million transactions that they are trying to make sense of to their process, to be able to sort of run through its risk profiling model to then work out who they should audit. Now, there's a lot of data, a lot of logic that has to be run through all of that to be able to come up with something that's that is clear and direct. Now, we all know that that's, Rod's example there of trustees, individual trustees versus trust, sort of coming up as scenarios. There's plenty of those out there. So there's plenty of activity out there which is just by data matching gone wrong, or data matching not particularly being understood properly and allocated. So there's but that's data is king at the moment.
That's it. You look at, and I think that 640 million is probably, I'm going to call it 3 years ago now. So it's got to be in the billions now, I would have thought, pieces of data. And you look, well, where are they getting it from? Banks, financial institutions, insurance companies, all the crypto platforms, all your Airbnb stays, all your rental property platforms, road traffic authorities in all states. If you have a vehicle registered in a company name, I can tell you now that data is making its way to the tax office, and they're looking from an FBT perspective that company has a vehicle registered in it. Are they paying FBT on it? Are they registered for FBT? Things like that. Rental tenancy boards, there's another one that comes up. So there's hundreds, if not thousands, of agencies now with data feeding into the tax office. Austrac, there's another one, all foreign transactions coming into Australia, the requirement of banks to report them above the certain limits, etc. And most foreign source income audits that we see come from data matching from financial institutions for money flowing in and out of the country.
Yep.
Again, some more media comments, but we've sort of really touched on those. But again, they're data matching related. And again, we see businesses that have various touch points, if you like, with various government revenue authorities, ATO, State Revenue Office, Payroll Tax, WorkCover. It's like if your numbers don't align the simplest one is gross wages declared on your PAY G summaries, gross wages on your payroll tax returns, gross wages on your workers' comp return. Those three numbers should be the same. And if they're not, you might as well wait for one of those three to ask something about why the numbers are different from the data that they receive. So you need to line up the ducks in a row, if you like, because the ATO and the other state revenue officers and WorkCover authorities are going to line them up if you don't.
Number 5 is the favourite, isn't it? That used to be top of the pops.
It used to be BAS. I mean, it got there in last year due to cash flow boost, but again, we still see a lot of activity from a GST perspective in first-time lodgement, large refund. The classic is purchasing a commercial property, if you like, in a trust. Using an example, the first return, GST return, is always going to be a biggie where they're claiming the GST back on the property purchase, and the ATO tend to have a look at those ones. A lot of accountants are ready for it. They think it's going to potentially come because of the amounts involved, but it's still a key area that we see a lot of audits in, as well as, and it's always been a focus on the property and construction sector. Going concern, change of credible purpose, all the specifics, margin scheme, sorry, is the other one, the specifics that apply to the property sector that don't apply to every other sector from a GST perspective, again, tends to create a fair bit of audit activity. And also then cross-checking those BASs to income tax returns. I use the easy example. If you lodge 4 BASs with $1 million in sales at G1 for each quarter, then if sales in the income tax return isn't 4 million, well, I reckon the ATO is going to start asking questions about that, especially if it's lower, if it's higher, or both ways, really. That's the easiest number that should be reconciled and agreed in a normal business type GST environment to income tax. But it's amazing how many audits that we see where they don't align and they don't correlate, and that's the focus of the audit area. It might start with GST, but it's really GST and income tax combined. Tend to be a lot of audits that we see.
And some of those JobKeeper ones that we saw early in the piece came from that, didn't they? Where the numbers in the turnover, for argument's sake, was a critical part of qualification for JobKeeper. And where do they get that data from? They're just matching it. They've already got it. You've been disclosing it as a business on your BASs.
Yep, that's right. Yep. Okay. So again, some more media grabs, if you like. Lawyers, other businesses making comments about cracking down on small businesses, about tax obligations, director penalty notice. Look, director penalty notices isn't something that we get involved with, but I think it's been out there enough, and it's sort of just in the context of what we're talking about. The shackles are off now. There was a fair bit of leniency, for want of a better word, during the last couple of years on outstanding tax debts, etc. But apparently there's $1 trillion deficit, in case anyone hadn't heard that in media blast since the new government took over that they inherited. And they are starting to collect taxes again. Now, that's not a tax audit, the collecting of outstanding taxes, but penalty notices are now coming. We're just coming back to that point. We're returning, if not have returned, to normality from a compliance audit perspective, working our way through the COVID period, if you like.
So number 6 is the one you mentioned before?
Yeah, the rental property. So we've touched on some of these, but from a claim category on its own, it you know, I normally did a top 5, but not this year. I did top 6 because there was a lot of word out there from the tax office. They were going to be cracking down on rental properties, audits this year, capital works, depreciable assets, repairs and maintenance, other rental related expense claims. I still see people getting audited for claiming the travel to their Queensland rental property from Victoria. That used to be a good one to claim, but that got stamped out about 3 years ago. But some people still try to claim it, and the ATO don't like that. And so Airbnb stays. I've mentioned some of these, the rental tenancy bond, the data's there. So the ATO can now link in and are looking a lot more focus on rental properties than they had in previous years. And they said they would, and they have, is really the point I'm trying to make.
Oh, sorry. Yep.
These were just, again, rental property type grabs out there. So going back to the point that, you know, it's out there. The ABC, The Age and the Daily Mail were writing articles about these areas that I've been talking about. So it's getting a fair bit of media focus in the last, you know, this calendar year. All these quotes are, you know, in the last 6 months.
So this next slide is always interesting to me, just because when we talk to accountants, there's, and we talk to them about, say, tax audit activity, we talk about tax audit insurance, often there's a comment to say, well, we're okay because we make sure that we travel under the radar. So we're under the radar, so our clients don't necessarily get audits based on that. But the stats that we have here, and the highlight we're trying to make here is that there's a significant amount of audit activity that we see, and they're in that pie chart. We've discussed some of these in the top 6 that actually generate and come from activity that the accountant doesn't actually have a direct input into a lot of the time. So you take employer obligation audits and reviews, for argument's sake. There aren't that many accounting practices that actually deal with the regularity of paying the wages, paying the PAYG statements, doing the super review, making the super payments on time throughout the year. Generally, businesses will manage that themselves. There's lots of businesses that do their own payroll tax and BASs, for argument's sake, and WorkCover. WorkCover's another typical one. You may, as an accounting practice, you may get the certification sent to you to double check it, possibly. But a lot of businesses do it themselves. Land tax, well, there is no technical return for a land tax, so there's that's just reported straight in. And then we saw, the JobKeeper payment audits that came about. So a lot of accountants helped with the JobKeeper audits in the early days, but the subsequent filing of them, possibly not. Stamp duty, the lawyers do the stamp duties more times than not. And then we've got the ATO excess super contribution. What do you call that one, Rod?
The free steak knives of the Audit Shield policy. So we cover data matching, we call it, on excess super contributions. But again, if you're not doing the payroll for your client and not paying the super, like the classic could be the employer, due to a cash flow perspective, pays, you can pay 5 quarters of super in 1 year because they want a tax deduction before 30 June. But last year they paid the June quarter in July. So if somebody's then dips over the 27.5 because the employer chose to make the payments, which is totally the right of the employer, they don't need the employee's permission to do that, then that employee, that person is over the threshold and they're going to get excess super contributions. So that's, and it's a data match. So we cover that. And look, it's 6% of the claims that we see. So, yeah, and Roman already touched on it. Your land tax, your stamp duty, they're not expertise areas of accountants. And, you know, there's a lot of land tax audits that we see where the actual root cause of the audit problem was the solicitor or the conveyancer didn't lodge the correct forms that were required on settlement of the property to advise that that company is trustee of a discretionary trust, for example, and they should be paying a land tax surcharge in a state like Victoria. And the accountant and the client had nothing to do with it. But it's still something that's covered by Audit Shield. And the same with a stamp duty matter. Sometime after a property settles, you know, the SRO might be looking for, you know, it was a land-rich entity that had a change of shareholding, or was it a unit trust that did a property development? And, you know, 2-3 years later, there's an audit on the stamp duty that was paid or not paid under the structure that was there. But certainly, and Roman already touched on it, if the accountant, and look, whenever I do sessions, I hand up in the room who does all the payroll for all their employer clients. No one ever puts their hand up. That no accountant does all the payroll for every single one of their clients. They don't pay the super for them. They don't actually know if they pay it on time. The second question I asked is, and it was recently, how many of you can categorically put your hand up and say that, you know, every one of your clients paid their June quarter super by the due date in July? No one put their hand up. So no, but the accountants, you don't know if your clients have complied or not, but the ATO knows. As I said before, the single touch payroll tells the ATO that your client hasn't paid their super or paid it late, and you didn't even know as an accountant. So when the audit comes, as much as the client might say, oh, this is your fault, accountant, well, it can't be really, but it could be the bookkeeper, it could be the client, it could be anyone, but you're going to be charged with trying to attend to the audit requirements, even though you had no involvement in the actual returns, if you like, that caused or triggered the audit. And look at it, it's 50% of the audit categories fit into this category. It's a massive amount. And many of your clients will touch nearly every one of those categories they could have some involvement with. If you've got employees, you're going to be definitely touching WorkCover and super guarantee employer obligation. They're going to be lodging BASs. So you're already, and if they're large enough, payroll tax, it's already 4. And I could even put fair work and fair work ombudsman employer obligation audits could even come into that as well to tip it over 50%.
Yep, no, very good. So for the accountants that sort of say that they're under the radar, they could say that on behalf of how they believe their risk profiling is, but I'm not sure that they can actually say that on behalf of what their clients' activities and risk profiling could be, which is it's the point of the slide is outside of the accountant's control, maybe influence, but not control. Okay, so we have so we talked about the activities that exist, and those activities, audit activities, are claims that fall into our product. So Rod, these are a list of things that when it comes to accountants of Audit Shield who make claims, these are some of the things that they miss out on, and we just want to obviously make sure that people don't miss out on.
That's right. So we have a couple of mottos in our business. Find a way to say yes. So there's a lot of innuendo, if you like, about insurance companies. Oh, they're always trying to say no. Well, we try to find a way to say yes, and that also means, hey, I'm not sure you fully understand every single thing that you can claim for under Audit Shield. So here's a list of a few common things that we see that accountants aren't always aware of because they just got busy, tied up, and they just think, oh, it's just income tax audits, et cetera, et cetera. But our definition of audit under the policy is very wide. It covers reviews, inquiries, investigations, examinations, as well as the obvious one, audit. So you don't have to have a letter from the ATO that says audit of income tax return or audit of BAS to make it a claim. It can be a review. It could be a phone inquiry. An email comes in through, the tax agent portal, whatever way it comes in there. Texts. Apparently, taxpayers get texts, accountants get texts about audits even these days. So, I've seen accountants lodge claims where their notification was a screenshot of a text from the ATO, but then it's real by the end of the matter. So data matching, interest, dividend omission letters, all those sort of things. And we mentioned the excess contributions tax already on the previous. Pre-engagement, pre-lodgement reviews, again, tends to be around the high wealth taxpayer group, but as we've seen before, through data matching, the ATO are aware of big transactions, and they now have a program where they'll come to the taxpayer and the client and say, hey, we know you disposed of this business, that building, it was in the news, we know from the data that we have. So we're expecting a big capital gain or a capital gain in the 2023 financial year tax return. So we want to audit that now before you lodge the return. So we're going to put you in a pre-engagement, pre-lodgement review program. And if you help us out and everything gets ticked off, then as long as you lodge the return with the agreed numbers, then we won't audit your return after it's lodged. So it's before lodgement. So people go, oh, but they haven't lodged the tax return yet, right? But you go, no, but that was when that program came out, we looked at it and we cover it as a program, even though it's before the return's lodged. Fair Work Ombudsman, as long as it's not a complaint, dispute resolution, if employment law type matter, unfair dismissal, or that sort of thing. If Fair Work Ombudsman are reviewing an employer for its compliance across all its employees to the awards and other financial terms and conditions that affect that employer and the business that they're in. If you look at something like a restaurant that will have multiple different awards that they need to comply with, if Fair Work look at that restaurant business for their compliance, for all the different people who work there and all the different awards, for all the employees, then that's something that Audit Shield would cover. So again, I think it's something that accountants mightn't be aware that we're covering it, but I do emphasise it's not complaint, dispute resolution, sort of employment law matters.
Boys, that's pretty good. That's pretty close to the end of the technical part of the presentation. What we'll do now is, if everybody's got questions, we've got a few coming in, but if you've got some questions, type them in the Q&A box. We'll sort of have a read and all that. We're going to chat a little bit now about what Audit Shield is and what accountancy insurance does, and I'll give a little bit of a blurb about AD as well. So if you could think about your questions, type them into the box. We'll spend a couple of minutes talking about our businesses, and then we'll move to the Q&A at the end of that. So I'll hand it back, boys.
Okay, thanks, Pete. Okay, so yeah, about Audit Shield. As the sign says, don't risk not having it. So fully compliant. I already mentioned ASIC relief for our Audit Shield product. You know, it's rolling it out under our guidance. You know, it's all going to be ticked off and compliant. We talk about a prominent local-based insurer. So it's pretty important with tax audit insurance at the moment. So we've just seen recently the big insurers walking away from this space. So the likes of CGU, QBE, Swiss Re, some Lloyd's syndicates have all left the space of tax audit insurance. So we've been with Suncorp and Vero now for a long time. So most of that sort of 19 years we've been in business. So and that consistency has allowed for the premium pool to be what it is, to substantiate and support that fluctuation of audit activity, to try and offer a fairly consistent and normalised sort of product. So new insurers will pop up in the space. Obviously, if people leave, others will try to come into that space. But their challenge is going to be trying to grow a premium pool that's sustainable. And that's the big challenge. We've proven that in the past, or it has been proven in the past, the likes of the CGUs and the QBEs couldn't develop a premium pool big enough to support the offering and manage the ups and downs. So just be wary of going with anybody that's a new insurer in this space. And also the alignment for interest of your firm and your clients. So our product allows for the relationship for you and your client to maintain that relationship in place. It's about your accountant just doing the work for the client. Payment happens elsewhere. And also it allows you to control your client. You've at all stages, that is your client, you're in control, we sit in the background. And that's and from an end client perspective, you're not handing your client over to somebody else, to an insurance broker to do anything. They are your clients, and you operate the Audit Shield program within your own domain. You control it all. There is no conflict of interest with our product. You do what you do. You're not conflicted as you would be if, for example, you're looking for a self-insurance model, for argument's sake. And consistency. There's nothing more reliable for an offering is consistency. So why change up an offering to try something different to only have to come back? It just changes that whole experience your clients have got. For something like tax audit insurance in a business, it represents a small part of what you do. And so why do you want to go and change it up and move it around on the bank of what? So so that consistency is there. Also, it's risk-free. We like to say it's no cost to the accounting firm because the client's ultimately paying for it, and there's never a loss. The accounting firm never makes a loss on providing tax audit insurance. Okay, so what is tax audit insurance? So as we see up there, so it's a dedicated product, provides for the payment of professional fees. Most of you all know this, so I'm not going to spend a lot of time on here, but it is held by the firm. and it's we've already gone through the coverage. It's got the broadest coverage that's in the market, bar none, and we compare them all. So so it is there, and no claim excess, no minimum claim. So you have an exposure, you have an experience, you make the claim. And our claims team, experienced accountants, go through it, understand it, and go through with the settlements. So again, we've covered off a lot of this in the presentation as far as what are the audit activities that we've seen. But this is just another little tick box on some of the smaller ones that you may have not been discussed so far. So record keeping audits, for argument's sake, in there. So R&D. Tax incentives are covered to the extent of the ATO reviewing an ATO claim made in a tax return. So that part's covered, just to add to that one. All the others, I think, have been pretty much covered off in our discussions there. So why do accountants choose Audit Shield? Well, it reduces the fee write-off aspects of it all, facilitates that prompt payment. We argue that we are your best debtor when it comes to payment of your fees. We pay a lot quicker than your clients do, especially for something like an audit where it's a grudge purchase from a client. It's a reluctant purchase. Clients don't want to have to pay it. They don't think they deserve to be audited. So collecting the money from your clients for audit fees generally is tough. And I would know from my experiences in practice. Removes potential disputes with clients. And that's because you take the fee aspect out of it. Now we have the we talk about technology. Technology seems to be a buzz phrase, buzz industry now as far as where things are going, and we're across those aspects. We've had a lot of it in behind the scenes of what we provide, which is a service supported by a person up front. And we keep adding to it. So, and you'll see some of them in the coming slides. But also we're also working on sort of improving some of those things as well, adding more value to some of that tech with our integrations into practice management systems, which are starting to roll out as we speak. And it's a cash flow positive solution. The clients pay you before you have to pay for the service. Okay, we talked about the thing that is most important, we believe, is the fact that we do the work for you. It's that it is that hands-on delivery. It is the concept of trying to extract that information from you to make those offers out as with the limited amount of effort that you guys in practice would have to do. So that's the Audit Shield experience. So why do clients like it? Clients like it because it's an annual fee, no surprises. They make the choice with regard to the product. They understand their exposure. So the relevance of that is the accountants aren't selling Audit Shield to their clients. They're providing them an option, and the clients make their choice as to what they want to do. And that the no surprise aspect is that peace of mind is what the clients are buying. Comprehensive coverage, so the accountants are comfortable that when this is being offered to their clients, they know it's the broadest coverage. And we talked about some of that before, but also aspects of being able to cover off the fact that it doesn't matter whether you file the return, you lodge the return, or the client lodges the return. You know that Audit Shield's sitting there supporting the offering. Okay, so yeah, and if there's also the other aspect, if other associated fees, including tax specialists, are required, the product is there to stand by and support the accountant through that need to get that extra assistance to help them. So. Yeah, and the comfort that the clients know that if there's something that happens, they know that the accountant's going to do the most amount of work for them because the accountant's covered, and the client doesn't have to pay. So that comfort level is important, and that goes back to that relationship aspect that we talked about before. There is no conflict of interest in the accountant doing the work for nothing. The clients know that the accountant's getting paid and they'll do whatever they have to do to help their client through. Talking about some of the smarts, just an example, some of the smarts. So there are the Audit Shield apps for the accountants app that's out there that accountants can use. We do appreciate that a lot of the partners, we appreciate, that the Audit Shield doesn't necessarily take a big focus for the accounting practices in what they do. We understand that 100%, still an important aspect to it. But the partners are busy with other things. So they don't necessarily have access or want to access our portal for information. Here's the alternative, is an easy downloadable and easy to follow app that just allows them to get that quick information about their clients, even allows them to check where their client's participating on if they're going out to visit their client, even helps generate that offer if the client hasn't participated and maybe should have. So a quick offer can be generated from the phone to go out to the client at that time, an updated offer. So we also do PI insurance. Audit Shield is the elephant in our business, but we also do offer PI insurance. We offer competitive rates. We always view, if you're using us, you'll appreciate what we do. If you haven't used us, just get a competitive, an alternate quote next time your PI is up, and just let it stand for itself as far as what we do and the value of our PI insurance as well. So at renewal time, just give us an opportunity. So yeah, we talk about the value there. It is a save money option that is there. It is a hard market at the moment. Premiums are going up. We know, we're comfortable that we've saved accountants money through this hard market, through the rising premiums. And the only way to know that is by giving us that opportunity. It is simple to renew, and also if you've got another proposal form, we're not asking you to repeat fill in our proposal form. Just send us what you've sent to your current insurer, and we can then run up an alternate quote for you based on that. Okay, back over to you, Pete.
Thanks very much. This is more your gig than my gig, but 30 seconds on Advisors Digest. We're a tax and SMSF training organisation. Our signature product is a online 40-hour tax CPD training programs, 40 hours over 10 months, February to November inclusive, 3-hour tax masterclass followed by a 1-hour tax update for the whole year. It's your whole 40-hour requirement. On top of that, what we do every Monday is we release a free video. It's around 5 to 10 minutes in length. There's just one technical question that we've received from an accountant that's after our tech support. So what we do is we answer this question in a video, fully free. Get it every Monday morning. If you're interested, have a look on our website, advisorsdigest.com.au. Boys, I'll hand back to you to move to the question slide.